first pre-open rates. It's all about Adani stocks. Let's see how much they react in the pre-open session. Now, these are stocks which have been highly volatile. Normally, we don't refer to pre-open first rates at 9 o'clock as some kind of an indication. But today, could it be different? Could the Adani group of stocks, where are they? Let's load them up. 10% higher for Adani Enterprises, 4% higher for Adani Ports. Gujarat Ambuja is going to be higher. Adani Transmission 5%, Adani Power 5%. Could it just be those? Could it be that phase of excruciating fall? Could it be a phase of grand rise for Adani group of stocks? You know, traders are traders, Kunal. They would say, look, we don't care about whether it's long or short as long as we make money. Does the risk reward ratio today at 9:15 favor going long in Adani group of stocks, even if there is a gap up start of 2 to 3%?
Yeah, I would still believe Adani Ports and Ambuja Cement, they could fit the bill, because Adani Enterprises is a very high beta stock, and to have a risk reward of 1:1, 1:2, the magnitude of volatility is very high. So you may have to have a 5 to 10% kind of a stop loss in stocks like Adani Enterprise. But for Adani Ports as well as Ambuja Cement, the risk reward could be far more stable. So I think if you have to bet on the Adani group of names, maybe even ACC could be added to that list. These are the three names which I would look out for.
Suresh, risk reward ratio at 9:15 for a day trader or for a positional trader. Still go along with the Adani group of stocks after a gap up start of 3 to 4%?
So if, like I've been saying, clearly not able to understand what to trade in Adani Enterprises and say Adani Transmission and Adani Green. Clearly Ambuja Cements was a buy at 330, it's a buy at 375, 380 on the open for the day, but if it opens beyond 380, then the risk reward does not seem great.
Okay, so that's the take coming in on how one should probably look at trading the Adani group of companies as well. But let's get some mid-cap ideas also from our chartist this morning. Kunal, what's your top mid-cap bet?
So it's a buy on care rating, the stock which has done quite reasonably well over the last 2 to 3 months. Very stable kind of an uptrend from 600 to 660. I think the stock closed yesterday. The risk reward also is in favor for the stock. It's been holding on to its 50-day moving average, consistent pattern of higher highs and higher lows. That's the stock which I would suggest as a buy. 700 target, stop loss 640.
All right, let's find out. Naresh, what about you? A mid-cap call?
So looking at a buy on Wonderla Limited, the stock is interesting for the sense that on the longer term charts, it's coming back to the 2015 highs. So that's a 8-year breakout on cards eventually for the stock, showing a lot of resilience in the near term. A stop loss at 400 and a target price of 500.
There you have it. Those are your top mid-cap recommendations. Keep an eye out on the currency as well. You've got the rupee strengthening versus the US dollar, opening close to levels of 82.32. All right, let's find out the khabar then on the Lal Street, and we've got more perspective with respect to the Adani block deal. It continues to, of course, remain the talk of the town. Let's take it across to Pankaj. He's standing by with some of the key insights about this deal. Pankaj.
So, I essentially, yesterday, of course, was the timeline as far as, Adani deal is concerned. And it was really the talk of the town that who is the buyer, what's really happening in. GQG, of course, in the end was the buyer. What I can pick up is that this is a deal which was proposed in Jefferies by Ashish Agarwal. And he, 1 month back, took this deal in Miami to GQG Partner. He introduced this entire deal to them. This deal took about a month or so. It was, by far, if you look at it, it's spread across definitely 4 stocks, but 15,000 crores makes it the largest absolute value deal that has really happened. And once, you had that entire FPO issue coming in, this was then proposed to GQG Partner. They agreed to it, and of course, they got it executed yesterday. So what we can essentially pick up is that, Jefferies went to GQG, proposed this particular deal. GQG agreed. Rajiv Jain, who's of course is a well-respected investor via his fund, is somebody who has concluded this, and you can see the detail that it's a 15,400 crore deal, which by far is one of the largest value terms block deals that you have seen. Any comment coming in from Jefferies, Adani or GQG would be interesting. That what's the way ahead? What's the way ahead as far as anything further stake increase, or any comment coming in from Adani regarding their funds and how they are going to use it is something which the street would eye out for.
Pankaj, must say there is a very striking resemblance there.
Between
the gentleman who conducted the deal and You.
Well, I mean, he's also an Agarwal and I'm also an Agarwal, so maybe that's why.
Yeah, there you go. Just a coincidence. The light Friday moment, right, Pankaj? Just don't go away, Pankaj. Both the pictures are there. Yes, yes, yes. There is a resemblance, Pankaj. Not me and you, the picture and you.
Well, genetics coming at play, perhaps, the lineage being similar. Thank you, Pankaj, for bringing us those insights. Appreciate you joining us.
Okay. I want to revisit Adani Group of stocks once again. Why I want to revisit Adani Group of stocks once again? Well, that's the talk of the town today. And apart from that, let's look at the lenders. Now, there is no default risk, but markets are markets. Sometimes sentiments will always overweigh the reality. 3% higher for Ambuja Cements, 2% higher for ACC. No, the ones you want to look at? Adani Enterprises, Adani Ports, Adani Power, Adani Transmission. These are the ones you look at. Now, let's also look at lenders. State Bank of India has a big exposure there. You've got a big exposure which is there from BOB, and you've got a big exposure which is there from Canara Bank. These are the other PSU banks which in a sense would be important. I think the interesting one, Kunal, would be LIC. They have investment in Adani Group of stocks, and if Adani Group of stocks, they go higher or they become stable, the embedded value of LIC changes. How LIC is looking on the charts?
Well, in fact, that's the stock which had started to get into mild recovery 2 or 3 days back. But I think this news could probably provide a very strong optimism for LIC. Last 2 or 3 days, it's been trying to hold up that 570 mark. So the selling had stopped for LIC, and there was a mild bit of bounce back. But I think after today's move, if the stock sustains today's uptick, then I think it could be a complete game changer for LIC, and that's 570 mark could actually turn out to be a major bottom in place for the stock.
Duresh, is there merit in thinking that LIC could be the first one to enjoy a benefit or enjoy a positive rub-off effect of this Adani news?
I would say yes in the near term, because the stock has also corrected quite a lot. So the stock was on a recovery path before this move started. The stock was at 700, 740. Does not get as much of an impact directly as people are considering it. So, and the stock is back to what, 550 to 600 zones, which is where the low was made in October. So yes, going back to 650s would be the ideal case, slowly and steadily. So at these prices, it looks very interesting as a buy, irrespective of whether the bounce happens because of the Adani Group prices. But at these prices, the risk reward is super.
Okay. 3 minutes to go, and the pre-open rates indicating that we could be in for a stable start. Okay, Kunal, are you still holding on to your Bank Nifty longs?
Yeah.
You were planning to sell them yesterday,
We
right?
squared off yesterday at 40,970.
Okay.
So that's what we aimed for, 41,000, close to 41,000. And I think after today's uptick, it's a good sign to buy back again.
Ramesh, what are your current positions? Where are you? Oops, caught you when you were drinking water. You want to finish water? I will come back to you.
No, done.
Okay. Now, Bank Nifty or Nifty, what are your current positions?
So I don't trade a lot of Nifty, but I have some Nifty options as a trade for the whole month. So I expect a decent enough bounce back towards 17,600 to 900 on the Nifty, and say focusing more on the sector. So oil and gas continues to be a favorite, and PSEs. So if there was a PSE index which would be in futures, I would have gone with the PSE index rather than the Nifty.
All right, just about a couple of minutes to go when we open up for trade, and going by the kind of landscape and kind of handover that we've had, it is likely to be a fairly healthy start. Just hearing out, going by our indications from what our chartists as well are describing in terms of their call on the Nifty Bank Index as well. We'll be closely watching out for what that index does and whether or not it's going to be a big support. You had the Fed commentary as well, the US indices that gained. You've also got a lot of stocks that are on the brokerage radar, so we'll be watching out for them. NTPC, for instance, is on Morgan Stanley's radar. We already spoke about Trent, that's going to be a newsmaker. Ultratech Cement is on Goldman Sachs' radar. It's an 8,500 rupee target price. It's a hold from Jefferies on SRF, so that's another stock to watch out for. GAIL, according to Citi, is a buy rating with 110 rupee target price, and Cipla as well. Axis Capital has maintained their ad rating on the stock, and there's a list of some of the other newsmakers that we'll be closely eyeing in today's trading session. But of course, Nikunj, I think the cynosure of all eyes, at least in the initial ticks of trade, are going to be the Adani Group stocks on the back of that big deal.
I like the word cynosure. No, that will be the talking point. That really would be the talking point today. Okay, but apart from that, you got a market, and you got a market which is now today would be trying to make an attempt to come back. You got support at key levels. Can that translate into can the support translate into some rally? Not a rise, but a rally. Market's positioning is so one-sided that positions are light, interest is not there, nobody really wants to participate. So are we in for more than just a one day of wonder? Fresh shorts in Nifty, long unwinding in Bank Nifty. The word long, I think, in this market is completely missing. It's just not there. Nobody wants to buy. And these are typical times when markets, they tell you, they just surprise you with a bounce. They surprise you with the strength. Are we going through that period where market could be surprised with some kind of strength? I'm just going to wait for the first rates to kick in. And just bear with me, ladies and gentlemen. Are we in for a decent Friday? There you go, first rates on your screen, and there you go. It's a 100-point gap up start for the Nifty. 100 points in today's market, I think, is wow. It is not a 2021 vibrant market where 100 point was granted. 100 points is respectable. The breadth is the talking point today. I think that is the talking point today. Now, what do we have, guys? We got a nice little, not little, but a solid comeback in PSU banks. SBI 5% higher, BOB 5% higher. I think for me, this is the one which matters. I'll talk about Adani Group of stocks, but the point which we are making in the morning, the lenders are the ones who are going to be benefiting the most. So you got Bank of Baroda, you got State Bank of India, you've got Punjab National Bank, Canara Bank. That is where the turn of the market, I think, is clearly visible. Now, the real Adani names. Adani Ports, Adani Enterprises, Gujarat Ambuja, ACC, Adani Transmission, long list, 6 names. Adani Enterprises, 8% higher. Adani Ports, 5% higher. Adani Power, circuit up. Adani Transmission, circuit up. Circuit up, guys, circuit up, not circuit down, circuit up. And then Adani Green, circuit up. Adani Total, circuit up. Adani Wilmar, circuit up. I'm using the word circuit up on purpose. I haven't used this in a while for Adani Group of stocks. But lenders is what we were talking about.
Yeah, definitely. And there's big move happening, as you pointed out, right from Bank of Baroda, SBI, Bank of India, PNB, Canara Bank. They're all seeing solid moves. And that's what even Kunal was alluding to, that there is more upside available on those. Separately, the metal names which are doing quite well today. So MOIL, on account of their announcement of the provisional sales figure, is reacting positively. And then the news regarding steel price hike is having a rub-off impact on Tata Steel, JSW Steel, etc. We're also watching out for what's happening in a couple of other companies that were in the news. Edelweiss, for instance, has opened with a cut of around 4% on account of reports regarding the income tax rates that were happening at the office of Edelweiss. Separately, you also have names like RVNL that continue to move on the upside, 3% higher there. I want to see what Alembic Pharma is up to, because they're taking an impairment hit of around 1,500 crore rupees. Shouldn't go well down with the streets at a cut of around 2%, and Natco Pharma is going to consider a buyback advance. So that stock is reacting positively as well. 3% higher, but the good news is it's a very broad-based up move which is coming in, and all sectors are trading in the green.
Yep, you've got support coming in from all quarters. No wonder then that the broader markets are healthy, and take a look at that market breadth. And it's clearly the advances trumping. Let's find out then, given the fact that we have the likes of SBI, ITC, Power Grid, L&T, Reliance Industries, all of those heavyweights in the green. What's your key takeaway, Kunal, on open? And is it a large cap stock that you would go in with for your first trade?
So other than banking index as well as the Nifty, I think AB Capital is something which I've been bullish on. That's a stock which I would continue to be look to buy as well as recommend to buy. I think it's a classical breakout for the stock, and I would expect at least a 10 to 15% upside over the very near term.
AB Capital, that's the stock that Kunal flagged off. Remember, he's been pretty bullish on this candidate. But Kunal, I just want to get in your view on some of the large caps. If you had to look at any of the names that could have that are recommending a strong buy at the current levels, signaling a strong buy rather, what would you recommend?
So I think from the private sector banks, it would be back again to the likes of ICICI Bank. If the stock crosses this 866 hurdle, I think it could be a bigger breakout for ICICI Bank. It's been trying to showcase some strength, resilience over the last couple of days compared to the other peers, but then it's been unable to give a breakout. So that's one stock which I would definitely look to trade on. Tata Motors, if the stock comes back above 430 mark, again this could be a very strong breakout for Tata Motors as well. and most of the other names, from the PSU banking stocks, Bank of India, not a large cap name, but I think Bank of India, Bank of Baroda, even Canara Bank, these are the top ones which I would be looking out to trade.
Okay, PSU banks and ICICI Bank. What about you, Naresh? What's the first trade you're punching in?
So we saw a bigger gap up on SBI, but closer to 545 to 548. Starting on the startup position on SBI, looks set for a quick move towards 570.
Now, Kunal, my question is that looks good, but could good become better? Or this is it, because ultimately you are not in like a rara bull market. So you may see a brief moment of glory for the bulls and then it could be back to square one. What are the chances that the morning excitement will actually fade away like winter of 2023, lasted only for 2 months?
So Nikunj, I would say it's a picture perfect day for the markets, because yesterday the US markets rallied. We've seen the global markets being into a bit of a disarray in the last few days. So there's a sense of comfort for the markets today that the global market positioning is a lot more better since yesterday's trading. Today the news flow for the one important sector for the markets, the Adani Group of names, that's also come back into favor. That could lead to a lot of rally and positivity for banking, PSU banking stocks, etc. So when the sentiment and when the global factors, when they both match towards a perfection, I think it's a classical case of a near-term bottom in place. So it's just a matter of now technical confirmation that if we close back about 17,450 spot levels, where we are just about trading 20-30 points lower, it could be a confirmation of a breakout.
Okay, let's also take a look at some of the other stocks which are buzzing around on news flow, and let's pull up some of these new age tech companies. Policy Bazaar, for instance, what's Zomato up to, what's Paytm doing this morning, because PB Fintech has been having a good run of late, so it's 3% higher. Zomato is just around the flat line, but it's seen quite a bit of run up already. Paytm to at least opening up with the green. Naresh, any recommendation from these new age tech companies? Now at least we have a year's worth of data to track these companies' charts.
So I continue to like Zomato, which is the stock at 50-55 levels. Seems like a base has been done here. The stock made a bottom around 40 back in July, August. So it spent a good year of sideways consolidation. So I would only go with Zomato because that is where consolidation after the big fall, so from 170 to 50, and after that 1 year of consolidation indicates the base is done, and slowly and steadily an initial target price would be 70, 75. So that's a target price, makes it a good risk reward, buying at 50, 55.
All right, let's bring on board Ajay Srivastav of Dimensions Corporate Finance. Hi, Ajay. We're all in a good mood because it's Friday, but certainly not because of the markets, because it's been doing precious little. FIIs have been selling. Is there anything that could really turn sentiment around, or you're pretty satisfied with the way things have panned out?
No, I think it's been a good market. I think it's been a good market because it rewarded people with patience. It has penalized people who were exuberant beyond the economy can support or the market can support. A very healthy market, the right kind of selling which took place. So all in all, I think, and the market survived the huge shock of what happened with the Adani stock, which are kind of large in the system. So all in all, you got to be satisfied that we got away with not so much damage as would could have happened given what kind of events took place, global selling which happened in this country, and this whole impact of Adani's saga. All in all, I think we got away pretty easy.
Ajay, would you say that the worst of the Adani impact is now digested and we'll completely move on from there? And any view particularly on the Adani group of companies? Have you bought into any of the names on the dip?
See, we have bought into Adani stocks. About 5 days back, we were on another channel. We bought into Adani stocks. I think but we said very clearly, it's a high risk trade because we don't know where the regulatory action is going to go. There's a parliamentary panel to investigate. All these things have a life of their own and the overhang which keeps coming up to the market. So yes, we have been buying the shares. That's one. Number two is, but it's still, I would say for investor, it's a high risk. So you need to be careful how much money you're committing to it. And therefore, can you absorb the risk of this kind? Because you've seen the kind of damage portfolios have had. So keep it small, keep it light. But at the end of the day, the companies have infrastructure stocks. Country needs infrastructure. There could have been excesses. There could have been violations left and right. But broadly, I think as a country, we believe we can ill afford a large shock of this kind on an infrastructure-driven companies in the system. Not saying they should be absolved of if they've done anything wrong, but the fact is, reality is that sometimes, as they keep saying in America, too big to fail, this is one of the sectors too big to fail.
You've bought into Adani Group of stocks 5 days ago. Could I pry a bit more and ask you which are the names that you bought into?
See, we don't allow to name the stocks, but really speaking, those are the frontline two stocks, the mainline companies and power. I think that's what it would be at this point of time. And so that is where we are at this. And, power as a sector, we are quite bullish on. Generally speaking, it's had a bad year at this point of time, but come summers, come this year, the Government Electricity Act, if it sees the light of the day, is going to be a great boon for power companies. No competition. If pass-through cost comes through, they're going to reap a huge amount of benefit to it. So power as a sector, we're quite bullish on. But, this was, I would say, an opportunistic transaction more than just a pure play on fundamentals.
What is the trade for summer 2023? Now that summers are going to be hot, some are buying beverages, some are buying cola companies, some are buying both, some are buying beer companies. What is Ajay buying? Is he buying power companies because we will be using more ACs? Is that the logic?
I think the logic is, hi, Nikunj. The trade in the market to me still is, use your money to enjoy your life. Using your money to invest is not the best trade for the 2023. To my mind, is the logic still holds. It was in 2022, continues in 2023, because if you're buying stocks, you're buying angst, you're buying uncertainty, you're buying anxiety. So I would say generally as a principle, if you're a reasonably invested investor, adding onto your portfolio is not going to do anything dramatic to it. You will get the returns if the portfolio happens, but buying more stock if you're heavily invested, which most of India is today, I don't think is a sensible strategy. Having said that, it's like this. You expect that people will have more cold drinks, people will buy ACs, but that doesn't translate to stock price increases at the end of the day, because our P's are still very high in the market. So if you take a good company like say Varun Beverage, I'm not saying recommend it. It's not a reasonable P. It's a high P stock. It may still show growth, still give you income, but it's a high risk venture. You saw what happened to liquor companies. They had the best quarter, but the stocks did not perform, or poor management. So just because industry is good, you had so many weddings, so many hotels opening up, the liquor stocks did not perform. They were poor managed companies. So, divorce yourself to the fact that economy can be very good, markets can be very good, but never underestimate bad management. India is full of bad management companies at this point of time who are not rewarding the shareholders, given what's happened to the economy last year. So I would still say on the side of this that, listen, do not try to invest your money too much, go spend it. But having said that, power, I said only one thing. Pass-through pricing is the key to fortune the power companies. If the government has the gumption before election year to keep on going on that path of allowing Electricity Act pass-through pricing, it's a great boon. It may happen this year, may happen post-elections, but eventually people will have to pay for power, and you have a monopoly situation. You can't get new companies to come in. 3 companies control almost 80% of power in this country, supply in this country. You can't go wrong in that. You may go wrong on timing, but you can't go wrong on fundamentals.
Yeah, that aside, as a news flash by the way, iPhone assembler Foxconn plans a 700 million assembly part in India. Now, this is where iPhones are getting made. So soon, the phone which you have now could be iPhone made in India for India. So that day is not far away when the iPhone which you would be having in your hand could actually be made in India. I think that's such an incredible feat, so to speak, post-COVID, at least for India. Ajay, that aside, you track Vedanta very closely. We've had discussions on it that the dividend deal is too tempting for anybody to ignore. What is happening there?
It's an offshoot of what happened at Adani. They're saying that you're leveraged. Will you be able to refinance? Will you do something strange with your companies at this point of time? That happened. But this is a different case because, Adani came as a surprise. Vedanta carries a lot of baggage of the promoter for 2 decades. So investors who are in Vedanta know the fact of what transpired when they tried to, go back to the memory, they tried to delist this company and so on and so forth. They could not do it on regulatory action. But after that date, he has been a persistently good performer company. I'm not saying recommending buy. We have a huge holding in Vedanta to be on for disclosure purposes. Maybe a lot of almost 20% of my portfolio sits in one company at this point of time. But having said that, I think it'll go up and down, but India cannot ignore metal companies. India cannot ignore supporting these kind of companies and the kind of pricing they're having. They're not leveraged by any margin. So yes, there will be an offshoot of what's happening around Adani stocks in terms of the promoter leverage. As an investor, I'm a little less concerned because all it means to me is more dividends, less capex, and you will eventually mining, it's a monopoly. You can't create them again. They have oil. They're the only private company of oil in this country. They got aluminum, they're the largest aluminium. They got copper, which is shut. I think it will start sooner or later, and that will be a very big play in this company. So, so India has so few plays on the metal sector, and this is a pure play metal company. So you can ignore some of the noises coming from abroad and buy in when the market is right. I think that would be the appropriate strategy than to just jettison and say, oh, it's going to all fall apart. It's not going to fall apart. Mines are not going to go anywhere. Stock market can go up and down, but mines still stay, the metal still stays in the ground.
So can I assume that you own Vedanta and you have every reason that you'll continue to own it?
I own it. I own substantial amount of it, and I will continue to own it. And every correction, if I see very meaningful correction, is on an ad list at any point of time.
Ajay, did you catch the push-up challenge between Dipinder Goyal and Nikunj? Because he recently interviewed him and he actually spoke about aspiring to become a $100 billion company by 2030. Is there anything within this new age tech space that you like, and how would you fare on a push-up challenge?
He caught the $100 billion part, not the push-up part, right, Ajay?
Oh my God! Oh my God! You have taken over the mantle from Rahul Gandhi, have you?
In what regard? I'm sorry, I just complete
Push-ups.
Actually, we must go for a game of golf, Ajay. And not that I know that you play golf. Let me tell you that I'll start with a big handicap. Not a pro like you.
Handicap is good. Handicap is good. Remember this always. Handicap is good in this golf. No, I am game for a game of push-up, but not for a golf, because I will let you win. You are in my hometown, so I'll let you win in any case. New age stocks are like wonders. You buy some of them and hope that the star will shine one day. Most expensive stocks at this point of time, all the old investors want to sell the stocks. They need to find new suckers for it. So my view has always been, yeah, you like it, excitement, buy some of it. But if you think it's going to be great returns to you, I think you will be disappointed, because everybody else wants to exit. Who is there wants to exit. It's the only case of a company where right from every employee to promoters to investors to everybody wants to exit and find an Indian retail sucker to buy it. Don't be one, I promise you. It's not pretty so far. It won't be pretty in the next 12 to 18 months. It's going to get worse, get more uglier. So I would say ignore the voices, stick to fundamental. If you like excitement, I'll say go play golf on a bet, go to Vegas, do what you like, go skydiving. You will find better stuff. Buying these with my money, somebody else's money, maybe, not my money.
Okay, look for the adrenaline rush from some other ways rather than the topsy-turvy ride that a lot of these new age tech companies have already given you in terms of the share prices as well. But Ajay, I wanted your take regarding some of these PSU banking names as well. They've had a very sweet ride in 2022, started 2023 on a bit of a somber note. Where do you see them headed from here on? Will you be a buyer in even the tier 2, tier 3 names in the PSU banking space?
Can I ask you a question? Do you bank with any PSU bank?
Not really.
Okay, let's do
But there's the corporate side of the world, Ajay, as well, right? Not just retail.
You know what? Can I tell you something?
Sure.
No bank has built value in the world just on a corporate book. It's the most riskiest book in the world because it's so skewed towards a couple of lenders can bring it down. Mudra loans can bring it down. They have no experience with personal loans. So yeah, temporarily always happens that the NPS came down. Did they recover that NPS? The answer is no. They lost the money. They lost public money. Look at the kind of capitalization they got. So yes, I keep saying it's a beautiful trading bets, always PSU stock, because they give you chances to make quick money and lose your money very fast as well. So I'm not a fan of PSU bank. I don't see a rationale why they exist in the country with just so many private banks. They cannot compete with them. They're going into space of personal banking, but they do not understand. They cannot recover this money eventually. I'm not a fan. And that's why I keep asking everybody that do you use this product of a PSU bank? And most they would say no. Yes, it's a lender for most corporates. You're right, absolutely. They have a large rural deposit base, absolutely correct. But 10 years from now, do you see a future of these banks? I would say very, very doubtful. Maybe one or two may do well, and I would put SBI a little out of that bucket of the PSU bank. But others, I don't think they have a reason to survive. And the only reason you might buy is that eventually in the next role of government 5 years, whichever government comes, some of these could be privatized and you could get a kicker off it. That's the only reason. Fundamentally, absolutely no. These banks, you don't bank with them for a reason. And that's the reason why you don't buy the stock.
Ajay, this market has been in a sideways trend or no return trend from almost 18 months now. When do you think we will come out of it? I mean, I was discussing this yesterday on the evening show that in Monopoly you have this thing called out of jail card. What do you think is what will be the out of jail card for the bulls now?
I have a different take, Nikun. Market has been pretty good. If you look at it, if you picked up stocks, even in the worst 18 months, with reasonable Ps or low Ps, you done quite good. If you look at the Stellar ITC, 78% over a year. You see Varun Beverages, you got 48% over the year. So if you look at the market, if you had invested in high P stock like a Page or something, you paid the price for it. If you're invested in reasonably good companies with a lower P stock, you've done decently well. So on a portfolio basis, I'm quite sure most people would find that they have done reasonably well in a bad market. The problem has been the mutual funds. They have not performed and they dictate the trend in the global in the returns part of it. The banking industry has not performed contrary to expectation and people bought stocks at very high levels. SIP is doing nothing better for investors. I think the most dangerous thing ever done for investors is that if you made a mistake, why don't you add to your mistakes? That's ridiculous, absolutely. If you made a mistake, you cut your losses and get out. You don't keep adding it to it. And that's a problem in India has been that retail has been buying consistently and therefore the return percentages are so poor in the market. So I would still say it's not been a bad market. It's been a good market for stocks. But to get out of this, tomorrow Ukraine can have a ceasefire with Russia at the end of the day. Suddenly the market may turn around on just one news that the ceasefire. So, from where it came, the downfall, Ukraine war, we never expected it. From where it can come to take it out of this so-called jail of yours is again an event like possibly maybe a ceasefire or something can help you. But I think you would do justice to your portfolio to stick to growth and low Ps. I think that's where the magic is. Don't worry about market, macroeconomic, this will happen. Too many noises. You will die with analysis and paralysis. Focus on what you like and where you go. Look at capital goods in India. If government is going to spend 10 lakh crores, lots of money is going to come to those companies, right? So these are on a clear growth path. Look at FMCG, MNC companies. They find a way to sell their product, make a margin. That's a safe place to be. So even in this jail, I think you are being misplaced if you are sitting in the jail with your companions of high PE stocks, because that's the way the problem is. High PE, low growth is the problem, not the jail, I think. You need to maybe shift yourself somewhat to the high growth companies which are going to be government largest, and you'll escape the jail. So all not pessimistic. I think there's good science stuff in the market as well, but stick with high Ps and low growth. I think that's a recipe of trouble.
Okay, Ajay, we'll let you go on that note. Thank you so much for joining us.
Thank you. You have a great weekend.
You too. Have a great weekend. Do some golfing. I think the sun is shining bright in Delhi as well. So probably a good time to go golfing.
Thank you very much. Thank you for having me.
Okay, let's take a look at the market as well, because 17,500 is what we are at for the Nifty. The Sensex is high around 465 points, and the broader markets too are doing their bit given the fact that the advanced decline ratio is quite healthy. Quickly want to check on some of the big movers as well, because we started off with the Adani Group of stocks, which are doing quite well. So Adani Enterprises continues to hold with an 8% gain. Then comes your other names like Ports, Transmission, Green, etc., which are higher by 5 to 10%, and the entire PSU basket that continues to do quite well, 8% higher for UCO Bank, Bank of India, etc. as well. Losers, not many, it's just Lodha, which is reacting a bit after that 20% surge yesterday. But we had got the auto sales data for the month of February, and the takeaway was that for commercial vehicles, it continues to be good times because we have seen robust sales coming in across the board. We have with us Mr. Vinod Agarwal, the MD and CEO of V Commercial Vehicles, to talk to us about their sales as well as what's the outlook like going forward. Hi, thank you, Mr. Agarwal, for making time and speaking with us. Wanted to begin by talking to you how the demand momentum is on the ground. What would you call it? Is it better than what it was a couple of months ago? Is it at similar level? Is it plateauing or worsening a tad bit?
Commercial vehicle industry is absolutely on the right track, and it is growing, and it is growing very well.
Yes, sir.
If you look at the figure, just to give you some sense on the numbers, we have had 3.5 ton and above industry. The growth is 42% in first 11 months. We are now reached 411,000 as against 290,000 last year first 11 months. Now within this, the only non-performer are the exports. Exports have dropped by almost 20%. Other than exports, the industry heavy-duty trucks, they have grown by 57%. Light and medium-duty trucks, they have grown by 19%. Buses, they have gone up almost by 4 times. Last year, full year was 17,000, And this year already 11 months is 53,000. So buses growth is extremely good. So only concern is in exports. Rest everything is going very well, and we are likely to see even better period going forward.
Fair. Just wanted to, talk a bit more about the LCV segment because they seem to have declined in sales a tad bit. Is there any pressure as far as the LCV segment is concerned?
You are talking of the smaller commercial vehicles.
Correct. Light commercial vehicles.
Below 3.5 ton. Below 3.5 ton last month was a little bit down because the last year was very high. Last year, last quarter was a bumper quarter. And then there has been some impact of the CNG issues because CNG last year was very strong. This year, the CNG prices have moved in the direction which are not good for the CNG industry. So CNG market has come down significantly in the light duty trucks as well as in the medium duty trucks. So therefore, there is some concern because of that. But overall, if you look at the industry, even the below 3.5 ton also, the growth till now is around 20% in first 11 months. And we will be very near to the earlier peak of 2018-19.
Commodity prices, last time when we checked, they were showing signs of coming up. Do you think just when everyone thought that for auto companies margins will now stabilize and they would improve as commodity prices were coming down, do you think the China bug has impacted you again?
Not at the moment. At this point of time, the prices are stable, I would say. There are some, demands are coming that there may be some further increase, but as of now, we are keeping our fingers crossed.
Do you think that the CAGR growth, what the industry has reported, it's almost 20%, little over 20%, could be a multi-year growth next 2 to 3 years? Average growth for the industry could be 20% plus, which means in 3.5 years, the industry could double.
I don't know how you calculate the CAGR growth because if you look at from 18-19, we are still lower. 18-19 figures which were there for the industry, 557,000. This year, first 11 months is 411,000. And likely for the month of March, last year March was 53,000. So even if you assume that there may be similar figure, March was very strong last year also. So we may end with 460,000, which is lower than the earlier peak. So CAGR wise, with respect to 18-19, we are still lower as far as the industry is concerned. So therefore, as far as commercial vehicle industry is concerned, we are going to see growth going forward because there is still a lot of pent-up demand and economy is doing well. And new trucks are much more productive than the earlier trucks. Therefore, it makes a lot of sense to replace these trucks. So we are likely to see more growth in the next maybe 1 or 2 years at least.
Well, keeping in view the new emission norms as well, that's going to kickstart from the 1st of April. How much of incremental sales are you seeing largely on account of the pre-buying factor that we've witnessed in the month of February?
There will always be some psychological impact, even though the price increases are not very, very high this time, because it's not like BS4 to BS6. Because fundamentally, emissions remain same. There is no change in the emission standards. The only change is with respect to how these emissions are monitored. Earlier, these emissions were calibrated at the factory level. Now, in the new standard, when we have OBD2, these emissions have to be proven in the market when the trucks are running. We have to meet these emission norms for light and medium duty trucks for 6 years and for heavy duty trucks for 7 years. So that is the type of guarantee which the manufacturers have to give that the trucks will comply with the emission standards for this period of time. And the regulatory authorities, they can pick up any truck after 18 months, and then they will see that whether these trucks are meeting the emission standards or not. And now to ensure that some more equipments have been put into the engines and the engine management system so that these things can be monitored continuously while they are in service. So that is what the change is. So this change is not very large. Therefore, the price increases along with the other normal price increases which also happen from 1st April. It is likely that the increase may be around 2 to 5%. But of course, there is some psychological impact. People feel that maybe the prices will be more. So maybe some people are doing some pre-buying, whereas there is no need to do that.
And given that at the Auto Expo there was a lot of green technology like hydrogen, fuel cell, etc. In how much time do you think the industry is going to be ready? What are your plans for hydrogen technology on the road?
I think in the green technology, there are a lot of things happening, not only hydrogen. First of all, there are things happening on the alternate fuels. There are things happening on the ethanol blending. There are things happening on the biofuels. There are electric buses. Then hydrogen is in the end. Hydrogen, now the work has started. Government has announced the green hydrogen mission. It will take time. At the same time, simultaneously, industry is getting ready with the technology. For example, we are working on both the hydrogen ICE engine technology as well as hydrogen fuel cells. And we displayed both these vehicles, both these technologies in the Auto Expo. And like that, most of the companies displayed the technologies. So therefore, industry is getting ready with the hydrogen technology, but hydrogen still, green hydrogen still, a lot of work has to happen. Therefore, it is likely to take time. But before that, there are other alternate fuels, biofuels, and ethanol blending, and of course, electric vehicles. These are in any case happening more faster than hydrogen.
Okay. All right. Really appreciate your time. So glad you could join us. Finally, the sun is shining bright for the CV industry, and CV industry is always this indicator of indirect robustness in the economy. Now, what do we have for Adani stocks? What do we have for the lenders? The gap up start is turning out to be the high point of the day. No, you don't want that. You want more follow-up buying to be coming. So check on the lenders. Bank of Baroda, SBI, PNB, Can Bank. These are the banks which have a large exposure to them. Bank of Baroda, SBI, PNB, Can Bank. Let's move to the other ones, which is Adani Enterprises, the whole bunch of Adani Group of stocks, 6, 7 of them. And then let's see what is happening there. Meanwhile, markets are steady. The Bank Nifty is steady. We're trading at the highest point of the day. And good old favorites, like an Indian Hotel, Tata Motors, good old favorites are actually making a comeback. Do you remember the data which we discussed yesterday that markets have been in a range from last 18 months?
18 months, yeah.
And when I looked at the data, I realized that, oh my God, Tata Motor actually has done rather well in those 18 months. I never realized that.
And remember when you quizzed the techies as well as to which was the outer stock, I don't think any of them actually pinpointed the way Tata Motors has seen that outperformance.
Yeah, you just look at the data and you said, okay, 40% for Tata Motors up in last 40 months is something which does not register.
Yeah.
Similarly, 27% down for Tata Steel is something which does not register. In last 18 months,
because the metals have been so volatile that you can't keep a track.
Exactly, but I'm just saying
does
does not
year
register.
of outperformance as well in 21. So
It just does not register. Is that data ready? Can we look at it? That's not ready. I think it's ready. No, it's not ready. Okay, never mind. We look at that data maybe in the afternoon because now some subjective changes would come. Actually, I'll tell you what. Let's look at Adani Group of stocks from October 2021. That's the time when markets actually topped out. It's been a good solid 18 months markets have topped out. And this is after this great one-way decline. If you look at from where markets topped out, this is 2020, 2021, Adani Enterprises is still in the green. This of course captures today's move also, but in last 18 months, it just cleaned out all the outperformance. Adani Ports in last 18 months has given you absolutely no return now. And I would imagine for other stocks also, Adani Power is I think the outlier there. But Adani Enterprises and Adani Ports, two flagship companies, have actually not given you substantial returns. So all this halabula which happened in terms of outperformance, a lot of that outperformance has got cleaned out. These returns are just very normal returns. Now Adani Green is actually negative if you compare that from what it was when markets peaked out.
And it's really surprising because if you look at the entire group, Adani Ports and Enterprise are the two businesses that really stand out on a very structural basis. Adani Ports has always been a cash cow, has been leading when it comes to the container volume in the country as well. In fact, has done 300 metric ton already this year, which is a record for them also. And of course, Adani Enterprises has proven the model of being the incubator, hiving it off and creating wealth. But these are the two stocks that haven't actually done much in the last 18 months or so. Time now to slip into a very short break, but don't go anywhere. When we come back, we'll discuss what's happening more in the logistics world with the management at Mahindra Logistics.
Ram Praveen Swaminathan, Managing Director and CEO of Mahindra Logistics, joins us. Now let's connect with him to understand that how things have transpired for the business and how things are moving as far as the economy is concerned. I want to start with a very basic question. There are enough indicators which are indicating that economy is slowing down. There are also some indicators which are indicating that the economy is not slowing down. If I look at the GST collection, but if I look at the freight rates, if I look at what is happening to the rural India, economy is slowing down. Net, for a logistic company like yours, how's the big picture looking?
Good morning. I think it's not one homogeneous pattern. Some end segments are doing pretty well. I mean, for us at least, automotive and the farm businesses and discrete manufacturing, they're all looking up. The volumes are growing there, and we see some strong progress there. I think consumer markets based on categories are a mixed bag. And obviously on the e-com side, there has been some slowdown. So I think it's hard to paint it all under just one brush. Net, I think overall we still are seeing growth. Q4 is generally seasonally a bit weaker, but overall we do expect to see, we continue to see a growth pattern.
Okay. So for second half of this year, irrespective of where the monsoon is headed, what is happening to GST collection, what is happening to the general export demand, do you think the business is in good place?
I won't give guidance specifically, but for the first 9 months of the year, if you look at it, I think revenue grew by 26% year on year. And almost all our end market segments actually grew across different service lines. So obviously there has been a slowdown in the second half compared to the first half, partially because of year-on-year measurement. But we overall do remain positive in terms of the trend lines.
E-commerce slowing down for you. I mean, it is supposed to be the highest growth segment, but the numbers are indicating the other way around, that the e-commerce business is slowing down.
Yeah, I think we have to look at what's happening there a bit. I think firstly for us and for many other players, I think growth is happening in terms of GMV and volume growth. It's probably the growth is lesser than what was expected or anticipated. And therefore that's resulting in a slowdown in terms of network additions, or in some cases even a clawback in terms of network additions. So this is just really in some ways a capacity reset. Hopefully that's something which we expect that through F23 Diwali, calendar year 23 Diwali, that capacity reset should happen. And therefore we should start seeing some more network expansions and breakouts in the next fiscal. But that's kind of that's how we see things today.
Praveen, hi, good morning. I wanted to also understand the outlook when it comes to the supply chain. Are you seeing any sort of disruptions on that front? And do you believe that things have been ironed out?
Yeah, I think on the automotive side, generally things I think are headed in the right direction. Almost all our businesses, all our OEMs we work with are showing positive traction and optimistic about the volumes over the next few quarters, because I think supply chain issues are largely restored. Commodities have moved a little bit up and down, but it's very firm specific. At kind of a bellwether trend, I would say most supply chain issues have been sorted out.
Can you walk us through the segmental outlook? Let's say you spoke about autos, we've spoken about e-commerce. The fact that you're growing at 20% plus on a CAGR basis, where do you think growth will come from? Where do you see visibility for FY24 in terms of either market share gain or business recovery normalizing?
Sure, I'd say that I think if I look at where as I look out a little bit, and if we just talk about big markets, we think farm will hold and will show growth. There is some possible impact of the monsoon, El Nino, and so on, but we believe that will grow. I think auto should show growth. Probably not as strong as the last 18 months, but should continue to grow robustly in the segments we operate. I think the consumer businesses, specific areas, pharma, we see good traction there. We are seeing some good traction on FMCG as well, it's coming back. So we do expect growth in some of those areas. Discrete manufacturing is generally up. I think we are seeing some strong movement there as well. I think on e-commerce, I think growth will be muted, but we do expect insight or in-network growth to be there, though at a slightly slower pace.
Construct for us the meaning of disruption. What is disruption in the logistics space? How are disruptions at play? How differently it would be for you in this today's disruptive world? Because when I speak to some of your peers in the startup space, they are completely gung-ho about how they would be able to change the logistics space because of disruption.
So I think disruption is, I think disruption is an opportunity and risk, right? So obviously, at the end, we are helping customers with their supply chains, and if their supply chains see risks, they are still focused on figuring out how to mitigate, the impact and still serve the end users or end buyers. And therefore, that provides both an opportunity and a risk. The opportunity, I think, is providing offerings and solutions to drive greater resilience for customers. There's an opportunity to use tech-driven integration across multiple service lines, so you can make supply chains more predictable or manage risk, from a business continuity perspective better. The challenge of disruption, of course, is everything is harder to predict. And therefore, there are a lot of moving parts, and in a business which has got it's just fairly hyper-local. At the end of the day, we are delivering in the last mile for most of our clients. I think that disruption creates challenges of cost pressures. That disruption creates challenges of balancing your network. So those are the downsides of disruption. As I said, the upsides are the ability to create new offerings and help customers with solutions which make their businesses more resilient. So it's a mixed bag. For us, we try to invest in those solutions and expand our basket of services. So we put in a lot of investment in building temp facilities and capacities for clients. We've integrated across different service lines a lot better. And therefore, that allows a customer to not manage individual service providers themselves, but actually speak to one company which optimizes their entire logistics. So I do agree. I think there are positives in it, and there's some challenges it presents as well.
Final question. If you have to do a one-to-one comparison, pre-COVID versus now, how much of the business has normalized? How much of the business has not normalized? And net, are you higher or lower?
I think for us, on the supply chain side, I think net, we're overall positive. There's no doubt about it. But if you look at our revenues, they reflect that. They reflect a higher number than even our historical pre-COVID peaks, even before the automotive correction. So I think overall we are net up. Obviously, we're investing in building out the business and scale, and that has some impact and carry on our margins in the short term. But from revenue and business level perspective, clearly we are.
Thank you. On that note, we'll let you go. Appreciate you joining us on ET Now this morning. Let's take a look at what's happening to the metal stocks as well, because metal stocks have seen a bit of a recovery, but let's try and understand what's triggering this up move in the stocks today. My colleague Sharad is with us to help us, understand what's exactly working out for the sector this morning. Hi, Sharad, take it away.
Well, yes, at first a lot of metal buzz is happening. Of course, domestic triggers are there and international triggers are also there. But first, let's point out the domestic triggers. The Indian steel mills have actually increased their HRC prices between 1,000 to 2,000 rupees per ton. And if you see, the mill prices actually are currently hovering above the 60,000 rupees per ton mark as well. Now, looking at the domestic prices, they're currently at a 5% discount if you compare it with the Chinese market. And with the Korean market also, it's trading at a discount of almost 1%. But the question remains is what happens next. And do remember that most of the mills which were there, they are expected to see margin expansion going ahead, and of course they were taking continuous price hikes, but because of volatility in the raw material prices, because of that the margins were not kicking in. So that is a positive movement coming in for the sector that analysts are expecting. But will this sustain? That's the main question. And of course the coking coal prices, they are expected to tone down, but NMDC, the brokerages are expecting that they are expected to increase the iron ore price by between 200 to 250 rupees per ton. And we have seen that whenever the iron ore prices start going up, then the steel also prices also do a catch up on it. And of course, the major thing being the China reopening, and yesterday important macro data also came from China, which actually aided the rally in the metal stocks as well. And the overall the impact, if we see stock specific, it will be better at least for the integrated players such as SAIL as well as Tata Steel, and of course GSPL is also better positioned as compared to its JSW Steel as well. Apart from the news flow coming in from the steel space, there's also news flow coming in from oil, where the February sales data came in 19% up, and the important thing is the management commentary, and they have stated that they will be ramping up their production going ahead in the coming months as well. And of course the steel exports also are on the rising side.
Sharad, thank you so much for joining us. This morning, there was also a note coming in from ICICI Securities having a buy on the likes of Jindal Steel, Stainless, etc. as well, while they have a reduced rating on sales, saying that most of the upside has already been made as far as sale is concerned, and even JSW Steel is something that they have a sell on. Time now to slip into a very short break, but don't go anywhere. Lots lined up when we come back. Follow on if you must, 17,500. Not a huge runaway rally after that gap up opening, but at least holding on to gains comfortably. Sensex is up 600 points, and today Bank Nifty is also doing its bit. So there's a bit of an outperformance coming in from Bank Nifty, and broad indices holding up pretty much in the green. But one stock which has been on a tear yesterday and today as well is up in the green is RVNL. Of course, the news flow was that the big order of Vande Bharat of around 200 trains is something which has opened, and RVNL could be one of the beneficiaries. We understand that they have been the lowest bidder in this order as well. Let's welcome on board Mr. Rajesh Prasad, the director at Rail Vikas Nigam Limited, to talk to us about what could this mean for the company going forward. Hi, good morning. Thank you so much for making time and speaking with us, Rajesh. Just wanted to begin by asking, this order which is there for Vande Bharat, what exactly could be the quantum of this? Because we know that the total order size is quite large, but what part comes to you in the consortium, and what does it take your total order book to?
Okay, very good morning, Anisha, Awane, and Mr. Nikunj, and thank you very much for making RVNL as part of your flagship show today. So the question which you have asked about the recent tender of 200 numbers of Vande Bharat train sets. Basically, this Vande Bharat is a semi-high speed sleeper coach, 16 cars, and the supply is to be made over a period of say 3.5 years. And it has got a maintenance component also, comprehensive maintenance for a period of 35 years. And we have become L1. We have signed an MOU with JS company Metro Wagon Mass, having a share of around 60%. RVNL is having a share of around 25%. JS company Locomotive Electronic System, LES, they have got a share of 5%. And the role of RVNL is the upgradation of the infrastructure for the production and the maintenance, the assembly execution, maintenance on train execution, the SPV management. We will be forming an SPV, then financing and the capital investments. And then a lot of design related issues are there. So Indian Railway, the design interface testing. So we will be involved in that. Then the approval coordination, this also becomes very important with the Ministry of Railways and the RDSO. And you wanted to know about the quantum of the project. So that I can tell you that the approximate cost of the project, see, it is not only the manufacturing component, it has got the maintenance component as well. And we are L1 with this SPV, and we will be giving an order, getting an order. See, LOA is yet to be issued. Only the bids have been opened, and 60% of the total quantum of work will come to this SPV. That is approximately 120 numbers of. It is approximately 120 numbers of train sets. And see, these train sets will be manufactured at Latur. I don't know how many of you are aware about the Latur workshop, and we were the creation of the Latur workshop. We wanted to take over this Latur workshop once it was commissioned. This particular project of Latur workshop, the turnkey project, was sanctioned in August 2018, and we got it commissioned in December 2020 on the Good Governance Day, the birthday of the Honorable late Prime Minister Atal Bihari Vajpayee. So we were involved in the Latur workshop.
Yes, Mr. Prasad, I'm sorry to interject there, but just to carry forward the point that you were talking about, what could be the incremental revenue that can come from this order, let's say in FY24-25? When's the timeline that the execution will begin? Because you talked about the overall timeline of 3.5 years, and this needs to be executed in. Will it start trickling in FY24 itself?
Yeah. So see, the LOA is yet to be issued. Number one, you'll have to make a note of this. It is only the financial bid which has been opened. So let the LOA should be issued. Let the agreement be signed. Let the SPV may be formed. I have told you about the MOU provisions. Who are the partners in this? There will be some initial capital infusions. The capital infusion will be in phases. The initial infusion by RVNL will be of the order of around 100 crores. The project has good IRR, and see, it has got a component of 35 years of maintenance. So whatever you are seeing that 120 crores for the 200 train sets, the maintenance will be, average maintenance cost will be of the order of 4% plus of the train set every year. So that component will continue for a period of 35 years. So you can work out the basically in terms of the growth in the order book, total 55,000 crores, where we have got a share of 25%, plus the maintenance component of these 200 sets, which will continue over a period of 35 years, and the maintenance charges will be 4% plus this is the quote which is the provisions made in the tender document.
Once the order starts coming in your order book, can I say that the real first incremental change will only happen in FY25 or 26? Next 18 months, you will not get any fresh upside from this order.
Yes. There are so many formalities which are required to be concluded before that. This is a unique kind of project. A SPV has to be formed, contract agreement has to be signed, the design related issues are to be concluded, and we want to basically make a model. This is RVNL's greatest strength, that we are diversifying, we are entering into the new model, and this company has been a very high performing company, and yes, we are fully focused on this. We are fully aware about the challenges. And we have constructed large number of this kind of turnkey projects, which was the vision of the Honorable Prime Minister. And the idea behind the turnkey projects, that the train sets, the locomotives, the coaches will be manufactured, maintained. And we have completed 15 such projects on a record pace. We have got the exposure, we have got the experience, and we just wanted to diversify. And we are very happy to inform to the investors, the esteemed TV viewers, that we are getting diversified, we are having a very positive outlook, and we are growing.
Optimistic. Good morning, Mr. Prasad Avan as well, joining in on the discussion. So other than Vande Bharat, tell us a little bit more about some of the other projects in railways as well as non-railways that the company is looking at.
Yeah, last time when I had come to your TV channel about 3.5 months back, then you were basically, I don't know whether you were there or not. One of the question was how to increase the order book to 1 lakh crores, that we have been working. I said that we are becoming from local to global. So our focus is from the local rail infra to global all infra. And the RVNLs, we have got a 3D approach. And with this 3D approach, we have completed and commissioned more than 120 plus projects, maybe 125 by March 2023. And the 3D is basically design, develop, and dedicate. The company has got a few key strengths: the will to win, the desire to succeed, the urge to reach to the full potential, and we have been working. So what I wanted to tell you is that we are going to have a very healthy order book. We are diversifying. We have already entered into the non-railway projects. We have already started executing the non-railway overseas projects. So we have got a lot of focus on the all kinds of projects. And metro segment is one segment where we are eyeing, and we want to have basically a lot of projects related to the metro segments, high-speed segments, and the diversifications like this train set business.
Currently is at 55,000 crore as per your last con call data. Any reason for you to revisit it, revise it, or come up with a new number?
See, this is the only financial bid has been opened. What I am saying is the let LOA, letter of acceptance, be issued, and the agreement be signed, and then SPV is formed. And regarding the order book, 55,000 crores, we will reconcile after the financial year FY 22-23 by 31st March, and then we can come back with the numbers of the order book. But I can tell you the future of this company has been very, very bright. And if you allow me, then I can give you some kind of comparison. See, the RVNL share price in last 1 year, with respect to the 1st April 2022, from 33 it has gone to 65 plus. And in terms of the BSE 500, 23,800 it has gone down. The BSE Infra 288 it has gone down. But this company has been growing. This is the biggest strength of the company. We have got a proven track record. It is a really very high performing company, and I can tell you that in time to come, you will find so many new kind of infrastructure projects in our order book,
Right.
and we will be growing almost in the same pace as far as the bottom line is concerned.
And we will interact with you as and when you do continue that growth path. Thank you so much for joining in. That's RVNL. The stock continues to remain a buzz in trade. What else is a buzz? Well, let's find out then from our chartists. Naresh Marani, Kunal Bothra, right back with us on Chartbusters. So, Kunal, let's discuss today's pick, Power Finance Corp.
Well, absolutely, yes, Avan, and this time I'm not going with the daily charts and the weekly charts, but this is more to do with the monthly and the quarterly charts for Power Finance. And I'm looking at the last 10 years of data for the stock, that how the stock has been into a contracted triangular pattern. So as you can see, that the resistances from 2010 onwards has been falling for the stock. The supports have been rising. It is a matter of time that the stock started to get into a breakout mode. And finally, the confirmation is back again for Power Finance, where the stock has confirmed a big breakout of a major triangular pattern, almost spanning a decade. Confirmation is also received from the indicators that like the RSI, which has managed to come back towards a breakout mode for Power Finance. So my sense is that the stock is now starting a course of a very strong, possibly multi-month, multi-quarter uptrend, which could take the stock not just back towards above its all-time high levels, but even beyond that.
Okay, that's Power Finance Corp, and that's what Kunal is tracking. Moving right on then, Naresh, let's discuss your recommendation and you're tracking BEL.
So looking at BEL, Bharat Electronics Limited, the stock after making that move in July to October has gone through a good enough correction, retested the same price points of that 85-90 breakout, and now it is setting up for a fresh trend again. And we've seen a lot of other defense stocks do better. We are seeing a breakout on the CPSE and the PSE index. Bharat Electronics is another stock which has a good weight out there as well. So the stock could see a breakout above the 9800 mark. Once that happens, we could expect a new all-time high here. So at these prices, the risk reward is very interesting. 1:4, 1:5 risk rewards. So a stop loss at 93 and a target price of 115 to 130.
For Bharat Electronics as well as what Kunal flagged off, Power Finance Corp. But let's find out what the individual picks are, Kunal.
Capital targets at 162, stop loss at 150 could be trailed from current levels, and UCO Bank is the other stock which is start to get back into a bounce mode. So at 27 odd levels would suggest a buy, targets of 31, stop loss at 25.
Okay, moving on, Naresh, your trades.
So first is a buy on SBI. The momentum should continue towards 580 is the view. Stop loss at 540. Second is a buy on Wonderla, which is a longer term breakout possible going forward. A stop loss at 400 and a target price of 500.
Okay, Naresh, thank you so much for joining us with those ideas. Wonderla Holidays is something that he's betting on. But time now to welcome on board the management of Dr. Lal Path Labs as well. Bharat Uppilappan, the Chief Executive Officer, joins us on the show now. Hi, Bharat. Thank you so much for making time and speaking with us. Let's begin by trying and understand the latest industry trend. Because has there been any improvement with respect to the competitive intensity, especially when it comes to pricing? What are the trends you are seeing on the ground?
And to understand the current industry structure, I guess, we may have to take a step back. I think a couple of years back when the whole COVID situation started off. At that point of time, there was a lot of excitement. There's a lot of what I would call importance given to the diagnostics industry. And a lot of things have happened since then. Now, what we are currently going through is the first year effectively after what COVID has settled down in the industry too. And as a result, what is happening really in my view is that the industry is now going back to basics obviously with a twist in the way it delivers services today. What I mean by this is that, what is really important today in today's context is all about medical excellence. It's all about servicing capability and the way you manage your patient-doctor relationships very effectively. So I guess the industry is now kind of come back to realizing that it is, good to be back on the basics front, and hence a lot of things which we used to talk about is really coming back to what we would do in the normal pre-COVID days, which is really looking about expansion, which is looking at strengthening the current core offerings and building consumer trust. So I think this is what has really changed from an industry perspective. One key learning out of the whole COVID situation has been that consumers have become more digitally savvy, and hence what you see really across players today is settling down of digitization programs all across. So all players have become digitally savvy, and now it is all about phygital play, which is physical and digital play coming together. So that is really what is happening. And in my personal view, I think there's a lot of focus on pricing, and we have talked a lot about pricing. But if you take a step back and look at the diagnostics cost.
Right. I just wanted to move right on and talk about the company in specific, Bharat, because since the month of July, we have seen the company take selective price hikes in the range of about 7% to 16%. Going forward, is there scope for further price hikes? Are you looking to improve your margins from the current levels on the back of this?
So I just want to lay the context here. Over the last 5-6 years, there has effectively been no price changes in the industry. In fact, pricing table has been going down for one or the other reason. Now, at the same time, inflation has been very high, especially on some of the people-related costs. As a company, we constantly rebalance pricing across various portfolios of tests. We don't talk about it much, but it is something which happens in the background as a normal course of routine business. So what I would like to say is that if you made some adjustments, it is to reflect the increased cost of people over a longer period of time, but we also taken price drops in many tests, in many channels, etc. In fact, you will be glad to know that on the most commonly ordered test, which is what people really want to do as a part of the regular regime, there is no price change. So I think this whole pricing piece has to be understood in the context of what is really the drivers behind it. Now, coming to margins, I think we have said in the past that we would, continue to work towards going back to our pre-COVID margins. These pricing, rationalizations, increase, decreases, whatever we do, is a way to look at the competitive portfolio, is look at the, market, where is it moving, etc., and build a business rather than try and improve margins out of it. So I think that is the way one must look at it, is to say that we would like to go back to pre-COVID margins level and not use pricing as a lever to increase margin profile.
Okay, so attempt is to go back to the pre-COVID margin levels, but one of the impediments for the margins to go back to the level is also the fact that the suburban business is a bit of low margin, right? What's the growth looking like in that business, and how's the integration really progressing?
In the West region has been a large opportunity, a white space geography for us. Suburban acquisition provides us a very strategic platform to build a business in the key market of West, which is possibly the top 2 markets of this country. And hence, suburban is a long-term game in which we will try and build a business in the West, which mirrors possibly what we do in Delhi, NCR, and other parts of the country. So this is really a portfolio game of a geography, and it's a long-term play. And I think, the teams are doing really well to integrate, to kind of leverage each other's expertise and build a very robust business in the West of India.
So what steps has the company been taking to improve the user interfaces and better experience with ancillary digital services?
Wonderful. I think it's a great question. When you look at digital, there are 3 or 4 applications of digital in the whole diagnostic industry. That has been our realization. One, obviously, is the consumer interface of app, website, which provides convenience of either booking or of report download or searching for some information. So it's a host of work which we are doing to improve that experience space. Second, I think what is really not talked about much is use of digital technologies for really improving patient service levels. As you would possibly remember, we had talked about Control Tower as one such initiative, where we pull data from all data sources of this company to really track each sample and say, is it running on schedule or behind schedule? And what is that we can do to really get the patient the report on time or ahead of time? And that is a key differentiator for us. The third area of use of digital technologies actually in the medical field, which is possibly something which we don't talk about much. So as a company, we are constantly investing behind leveraging digital technologies, especially pattern recognition, image recognition, AI tools on the medical side to better improve the quality of reports, which possibly a human eye can miss or can have a different interpretation of. So we have invested a lot of capital on getting the AI and medical side going, and we'll continue to build on that. So effectively, if you look at digital, there are three components of digital, and we are very well invested in all three areas.
Okay, so since you're talking about investment in the digital arena, let me talk about the investments in the actual labs, etc. as well. You operate an asset-light hub-and-spoke model, but going forward, what's the expansion plan here, and overall, what kind of organic deals are you expecting in FY24?
Right, great question. If you look at FY24, what we're really focused on, like I said in the very beginning, is to get far superior in execution on our basics, which is about geography expansion, which is about building stronger relationship with our current client base. It is all about improving better service levels to our patients all across the country. So those are some of the fundamentals which we are focusing on, and like we have done in the past. So we expect some of those obviously delivered through a twist of digital to yield good results for us as we look for FY24. We are very optimistic of what the future holds. We would once again look forward delivering double-digit growths, and that is what we're really focused on.
All right. Thanks so much then for taking time out and joining in and giving us a view on how business is shaping up at Dr. Lal Path Labs. I just want to quickly check in on the markets. 1% higher for the frontliners. You've got the broader markets as well holding out. Pull out some individual stocks that are a buzz. PNB, for instance, is active in today's trading session. That stock is spiked up. Giving it company from the banking space is also Union Bank that's doing quite well in trade this morning. And ACC along with Ambuja Cement, both of those stocks as well are active in trade. GAIL is another one that's tracking the gains this morning. Well, let's move right on then. Lots going on in the world of commodities. We've got Vinny here to give us all those details. Morning, Vinny.
Good morning. And looking at the oil prices this morning, seems like they have fallen off from those highs we saw in the last couple of days. More economic headwinds from the rising interest rates, renewed optimism over the rebound in China demand, and obviously that is keeping oil prices a bit subdued today in trading session. But oil prices maybe could end the week on a positive note is something that we are keeping an eye out on. Let's see what actually happens overnight today as well. Moving on, gold prices, they have advanced this morning as well. They're set for their first weekly gain coming in 5 weeks, and the Federal Reserve officials helped provide some clarity in terms of the path of the monetary policy, how will they be taking place, and rate hikes going forward. So on the back of that, gold prices are seeing a bit of a rise coming in. Copper prices, when you look at the copper futures, they've risen by more than 0.2% this morning. They're set to add almost 3% this week, and on Thursday, that is yesterday, when you look at it, amid the growing fears in US, we had seen a bit of a fall in copper prices. But as of now, this morning, copper prices are seeing a rise. And lastly, let's talk about soft commodity, that is palm oil. In that, we've seen the palm oil prices actually have hit an 8-week high. The Malaysian palm oil futures, to be precise, closing in on their highest level since November 2022, mainly because of the risk in the export demand and a weaker ringgit, and supply concerns are factors coming into play for palm oil prices.
A lot of factors at play, not only for crude oil, but for palm oil prices as well. Thank you, Vinny, for joining us with that quick take. Time now to slip into a very short break. Don't